Hi, I hope you'll be doing good. I have seen in the thread that the ATM uh, method has been quite a success there. I'm quite happy because how the alpha trading method is developing right now. I do think that we made a good decision into exposing this into the open in the public, and I really want. I think this will turn into a system, and that has the potential to become a company or something bigger. We've been studying the statistics, and they look quite good. In fact, I'm amazed at how this thing is working around. I have been trading with the NQ, the Nasdaq, and this last month, and I've had quite very good results in that market. So, but I wanted to talk about a little bit of volume, and also someone in I remember this in the thread, a post asking about the divergence and how we use it, or how I use it in my daily trading, and I wanted to talk about a little bit of this. um, Let me tell you that I will use the crude oil to as an example on how this works and how I see it and how I apply it. Then later I will talk about the NQ also, so you can see that this is working for both extremes of the market. This week the crude has been behaving a little bit upward, but anyway, we can make money using the alpha trading method. Okay, right. As you see, we start all the time by looking for a formation, a setup that's a lightning up, and what I wanted to point out is how we can see if the market will go our direction with the strong trend, or at least given as the 15 or 10 ticks that we're looking as a daily trading, as a daily target. And because sometimes there have been, of course, failed lightning ups and downs, as well the W and M setups. Normally the perigee V, an inverted V, is not failing that much. Of course, it's working. I will talk a little bit about that in another video. And also, I have a video pending on talking the the uh, what I call my levels chart, and how we come by using the Fibonacci levels, and how that it's applied, and how we find a market level. Right. Okay, then but that will be another video. So I want to focus right now on talking about volume. So we said we started to talk to by analyzing that we have a lightning up setup developing here, and if we move this the market right there, we can see that this is started by the CCI line testing the zero line, then coming a little bit down, and then going pushing higher. That's the moment where we say, okay, we have this swing high there. The price is above the step MA. That's a very good signal. Also, the minor cloud. I don't have the major cloud here, but the minor cloud is in a wedge formation, and by that I mean that the price, the slower, the faster it's approaching the slower exponential, and it's forming this wedge right there, that wedge there. Just for you to see it, that is telling us that in some time in the near future that two moving average will cross and will form a positive cloud and validating our entry. Now, what we evaluate now that we have these two indicators, this is wave volume and this is up and down volume. If you want to see the settings, I want to show you this. I'm using a 14 median period, and it's a W wave volume. This indicator you can find it here in the forum. And also I'm using the volume up down, where you can use the GOM delta volume up and down. That's a very good indicator also. I'm not using it right now because it plots real-time information, and I don't have it for the past week, so I have just not showing it here. Okay, now our point of entry, as you know, should be one tick above this swing high here. So that would give us our entry on 101.70 right there. But the interesting thing is this: we have a selling that came all the way to this point here, and you see here that the sellers have come into this point, and they came all the way to this support line here. That's why these lines for me are very important, because the market always come to test these levels. So what I see here is that we have increasing selling pressure, and sellers have come into this point. Now, you normally, before you have a reversal candle like this one here, that's a reversal candle. We want I will wait for this reversal candle to form, to end. But what I'm looking for, it's this down here. You have these candles. This is up and down. This is up and down volume. And what I see, I see decreasing selling. That for me means that the sellers have decreased their participation there, and that is telling me something, because I see this point and I ask myself, what are sellers and buyers doing at this time? And right as the price approaches, and that's the logic, when the price approach one important level, and all of these levels are important, all of these levels there are important. So when the price approaches one of these levels, I want to see what the buyers and sellers are doing. So then I have the price coming up higher. I see buyers coming into the market, and we have changed from red to green. That means that buyers have come into the market, and they are analyzing, they are moving the prices. Okay, now we have our entry here, so let's see what happens. Now we have our entry. We have entered the market right there at 101.70. 101.70. That's our entry, and we have been filled. Now, what I want you to see is the following. At this time here, this point here, we have accumulation of sellers in this zone there. And also you have these two red candles there. That means that sellers have come into the market. Now, what I want you to look at for divergence in the sellers. Look at this. Look at this amount of sellers in the market. Compare it to this one here. That means that the sellers have evaporated this market, and buyers are stepping in and taking control of these prices. Now, how do we? Well, you can see this also here, right here. You see the amount of selling that came into this bar right here, right there. Right, this first red candle has this amount of selling, but the next one has a totally diminished interest in the sellers. I would say that less than the 50% of the previous candle. So that means that the sellers have they are not interested in bringing the prices down. So now our lightning up is filled and our entry is filled, and we start going up. And what we see is that there is a strength in the market enough. Obviously, this is the market open, but we entered at 70. We are at 80 here, and what we expect is what the prices will do when they approach 85, since that's the immediate resistance. And also we have these prices going there that swings. Now price go all the way to the 86, and what you see, and I hope you can see it, it's once again divergence between the around the buyers. You have seen a lot of buying pressure here that corresponds to this pick. I'm sorry, and then we have this price going up, but the sellers, the buyers, I'm sorry, are not the same amount as they were here, and that will start to give me some signals that we could be facing a retracement soon. Okay, there's our first candle, red, and we see sellers approaching this market, but they once again the same thing here. Look at this. There is a high amount of sellers stepping in the market, trying to get into this rally. And normally what they are doing is they are preparing to buy at a discount, and that's what we want to do also. And then the sellers evaporate from this position, as you see the volume diminishing quite good. That's an important signal there. So we start once again, and that's another signal for us. You could have entered there. There is no setup there because that lightning up occurred above the 100. But anyway, that could have been a second entry if you wanted to go. But we have to break this swing here, and let's see what the market does. So our entry, if we would have wanted to get in here, should have been at 89, and prices going up with a strong buying and a strong presence of buyers, and that bring the prices all the way to 102.20 and something. So I want to point out that this will help you to understand if your position or the position you're taking, it's supported by the buyers or sellers, and that's important. Okay, so what we are looking for is divergence between the sellers and the buyers, and we have this divergence here. We had this divergence there as the prices go up, and we see that sellers are not participating in this market now, but instead buyers are taking positions to come into the market and bring this price up, and that's what we are pursuing. It's that we want to be in the right place at the right time. Okay, I think we can review another example here. We see right here we have another setup there. I'd say it's an M. It's an M. It could have been and could have started being a W right there. That's a W. Yeah, but what we see here, the W means that it's a long trade, right? It's a long trade. But what I'm looking here, it's that the buyers are not interested in bringing this price up. Why? Because divergence in buyers. You see that you see this point here, right? And you see this zone there on the buyers. Next one, it's a little bit higher, right? So we have, I'm sorry. Okay, so we have this swings there connected, but then we see the buyers, and oops, what's going on with the buyers? Buyers have disappeared from this market. Okay, that's my first signal that something is not going in our direction. Second thing, we still use this one because that's the higher point there, and then we see this point between this and this. We see this and we say, uh-oh, buyers, where are the buyers? So you start questioning yourself and you say, this is something wrong here. You see, you have another swing high there, and but price cannot, buyers are not at this level here. So something wrong there, something wrong. That would have told me that I would expect a reversal. So then for me this would be the M that later formed right here. That's an M formation. And I would have come and waited the price to go below the step MA, because that's the important thing there, to be below the step MA. That's our security there. And I would have entered on the break of this step MA, probably one tick below, and I would have entered there, and I would have expected the sellers to come into this market and make what they know to do, right? We have a W here. Once again, we have a slight lightening up here. It's not so clear, but anyway, but that's our W. And you start asking, where are the sellers? You see this point here, you see this point here, and you start looking for sellers, and you see that sellers are not there. And since the sellers are not there, we expect the buyers to come in and make what they know. So our entry should have been the break of the step MA, one tick above. We go there, and we expect this market to give us the 15 ticks which the market gave us, and that's how we trade on this one. I think this will help some of you using these the volumes to volume up and down volume in this wave, W wave volume, and this will help you. You see, once again, I'm using 14, and you can use whatever you think. You know, I'm gonna explain how I came to the 14, because some have asked this before. If you want to go to 20 and look how the bars changed. Okay, right there, you can test 20. That's 20, and I was testing all the way up to 50, and you can tell that I want to be right in the spot where I'm able to see. You see, this was the previous peak that I draw, and now I have this one here. So, but there is no correspondence between the price and the peak of this volume. So I started to go lower and lower and lower, and I ended up being in the 14, and that's what I will use for my, and I've been using for my personal trading. Look at that. Right, I hope this can give you an idea on how to use divergence in volume and price to help you get into the best trades and best setups. And I know that since the ATM is quite successful now, it will help you to manage your trades accordingly and in a better way. Right? Okay, I will post this video as soon as I can. I hope you can review it and use this for your daily and normal trading with the ATM. Okay, bye.